Doc here from North America. This is TGIF. I wanted to hear all the numbers and what they were talking about because we were wondering what the labor number was going to be like, and they're breaking it down into different levels to try to understand it. They were looking for the weaker the assumption was, the stronger the stock market would be. Now the Dow's only up 167 points, so. Nikkei is down about just 10 points, that type of thing. But they're just looking at numbers. The yield is down 0.2. In other words, they're thinking that interest rates. Let's see. Just looking for the number. It's 315,000 jobs added in August. They thought there was talk that if this thing came in under like 150,000, 150,000. Labor participation rate is 62.4 now. So we're looking at some numbers, trying to get a general idea of how this all plays out this morning, because we thought it might be a relatively important, not me particular, the market interpreted as a relatively important number today. They want to see how much the economy is starting to slow. So the unemployment rate was 3.7. So it's just kind of like I guess the actual average hourly earnings, so forth, and all that other stuff that's usually ignites the excitement. Okay. They weren't expecting the raise. And they're looking at it as the participation. That's what they're looking at, part of the participation. They're real happy with the idea that more people are entering the workforce. That's a good thing. But obviously put a little charge into the stocks themselves, which was a little surprise. Nothing major. Only 158 points. So that's background noise. We've tried to remind people here all the time. If you don't see a 3% move, like last week, when you saw over a 3% move, it became the trend. But when it's like 2%, 1.5%, it's not the trend. And so, in other words, once that 3% started, we had a daily sell. Let's just go over to that real quick. We're just going to drift around a little bit here. It's just, where is it at? Let me just put the S&Ps up right there on J4X, and let's put them up over here on Chicago Quant, right there. And so you can see that strength kicking in. We had a 3% drop here, and it gave the momentum to the marketplace. Now we'll watch and see. Obviously, if we had a 3% move up today, that would be fascinating. And there was talk that if we saw the numbers, the revision June and July show 170,000 fewer jobs created. Okay, that's what's giving it the juice. The 170,000 fewer jobs created than previous reported. So that's giving it the little punch. That's what's really doing it. And there was really serious talk. Under 150,000, they really thought, I mean, just in general, if the number didn't come in at 3 and came in at like 150,000 or 110,000, there was talk in the marketplace that we could see a big jump in the stock market. All right, let's get over to the currencies, and we will go from there. Let's see. Let's go find it. Find it. Ooh. Right there. And there's the dollar index, and you see the dollar is down today. We're still in the buy. We're getting a volatility signal at the moment. This is going on a third full week in a weekly buy. Oh, there's the Dukascopy says there. You see it there? Can you see that? Yeah, you can see it right there in that big box. I wonder if I can make that larger. I can move it around like that. Let's see, if we go like this, what happens when I go like that and like that for a moment? Oh, okay. So you see it over here, right there in that box, and what it says is the United States published their monthly employment data. This is from Dukascopy. U.S. average hourly earnings on a month-on-month bias have increased by 0.3 compared to the forecast of 4. So it's slowing a little bit. Non-farm roll employment has beat the forecast at 315,000. They were looking for 295. Yeah, there was serious talk that if it was below 150, it was going to be really powerful. Meanwhile, the official unemployment rate is at 3.7, not at 3.5. So it's jumped up to 3.7. The market took the news as took it as bad for the dollar. and the U.S. currency index dropped a third of a percentage point in a few minutes after the announcement. This is not trading advice. Yes, this is just data. Exactly. All right, let's get back to right there. And let's put in the dollar index. You'll be able to see it right there. Right there. You can see, starting to turn down. You can see the green line turning down right there. Same thing with ours. Matter of fact, they have the same, if you notice, it's the same type of jaggedness. See that? Right there, and the jaggedness right there. Same thing. Same type of jaggedness. And, and we are still in the buy, though. And, it's indicating the action that just occurred. So, and let's see, what else can we... Oh, let me tune in to make sure anybody has a question on the chat line. I just wanted to get this number out of the way. I thought it was very important. There is Metho. Metho, how you doing? There's 47. There's the Robin. There's the Jordan. The house is full. Cool. Hey, Doc, what does the NFP's results mean for the stock indices? Okay, good. So I kind of laid that out. I figured that was going to be what people would be interested in figuring out. And we'll see. I think the biggest number out of it all is the downward revision. And the second one was the 3.5 to 3.7. They started taking apart so the revision in June and in July show 107,000 fewer jobs created than previously reported. Overall, I guess it was 170. Let's see. I'm trying to figure what that number is there. Okay. So, in the end result, it's just giving... Look, I think that money is so comfortable with the Federal Reserve and the central banks across the planet propping things up that they don't want to accept that the Fed is trying to tighten at the moment. And you see it in the bond prices. You would think that you would think in the bonds would be trading in the 4s somewhere. Well, as we get up to is about a 3.5. It all seems to stop in that 3.5 area. So they're just looking for just some signs that the Federal Reserve is not going to use a sledgehammer. That's pretty much what it comes down to. So everything I said there, 47, did that make any sense to you? Yeah, bond yields are a little bit lower. Stocks are a little bit higher. So that says that what money thought. Now the question is, are we going to see the foreign investors come into this market at 9:30 U.S. time in another 49 minutes and start smacking this buying down? That's what we've seen so far over the last week. Is that let me see. Let me just show you. See if we can identify it on the screen. I don't like to say something without it being true. Notice that after the 3% move right here, okay, notice that everything was closing down towards the lows of the day on the bar itself. Let's widen this out so you can see that. So in other words, the next day, which was a Monday, closed to the middle of the range. The next, not even middle, it was the lower end of the range. You can see the highs are much higher up. You can see same thing here. See, now there, yesterday, at the end of the day, they were anticipating the labor numbers. Some had an anticipation of what would come out. So notice that they closed the Dow Jones Industrial Average up and the S&P's up yesterday for the first time in 4 days away from the lows of the day. And then now you can see here today where we started off flattish up, just flattish, barely dropped below, and now they've turned it up a little bit. You can see the daily is trying to lift itself. Weekly's not, but the daily is. So that's the gist of it all. The gist of it all. All right, let's go over to the currencies, and let's see. We'll go like this. Throw that in there, and then we'll go to the currencies. Let's take a look at the. What an interesting article I read this morning about China and Russia, moving their assets slowly away from U.S. dollars. And the Russians have done a much better job. It was the Chinese still are with $1 trillion worth of U.S. bonds. So they're not doing too good a job at it, but they're trying, and they're trying to work along with the Russians. But it is kind of unique to watch what's going on there. Let's see. Let me show you the story itself. Let's see, where's it at? Let's see, I'm looking. I know I have it. I parked it. There we go. There it is. Oh, it's perfect. It's my first one. There we go. Russia de-dollarization escalates beginnings. Strategic plan to buy billions in friendly currencies. Problem was, the key thing out of all this is that China joined the fight more recently, but it says here, but has been increasing its gold reserves while reducing U.S. treasuries. And I still got about $1 trillion of them. I'm not reducing it that fast. Let's put it that way. And then they have a nice chart showing that the Russia and China combination, and you can see where dollars became less and gold became more. But it's not that far off compared to, look at the distance, say, like right from here, and how high it's gone. They're buying gold, but they're not exactly pushing out and they had to combine Russia and China together because China, this is probably like flat, because they have over $1 trillion in U.S. bonds. I thought this was pretty interesting. It says Russia is considering a plan to buy as much of the 70 billion in yuan and other friendly currencies this year to slow the ruble's surge. In the new situation, accumulating liquid. This is the key one right there. In the new situation, accumulating liquid foreign exchange reserves, the futures crisis is extremely difficult and not expedient. In other words, they're trying to say it's not working. A presentation on the proposal prepared for the meeting said. So in other words, this is from the Kremlin. Basically, they're saying that what was it? Expedient execution. They had a good one here. It was like top meeting. What it really came down to is, let's see if I can find the line. It was really good. Basically, what they were saying is currency. Oh, here it is. Currencies of friendly currencies like offshore yuan, Turkish lira, and Indian rupee all caught a bid on the report yesterday over it. Problem is that they're not. There you go, right here. This is the number one key thing right there. It says excess. It is this. It is that. It says excess reserve holdings of all G7 currencies may not be as strategically viable as thought. And that's they're because of the embargo stuff and all that other stuff going on, and they're concerned that they're not able to get out of currencies. Now they had this really cool chart right here about reserve currency status does not last forever. So back in Portugal, I guess in 1450 and 1530, we had that. They were the number one currency in the world. I thought it was metal at that point, so it's kind of like a gold thing. Spain for 110 years, Netherlands for 80 years, but their paper was backed by a metal. And the U.S., notice how it's confusing here. They don't really put a date in; they just throw it up there for both of them. They say basically 1900 to 2100 and going. So it's a couple hundred years it's been going on in the United States. So it's a little confusing there. Also, basically all those currencies, even the dollar, was backed by gold at one point. That's kind of... what can I say? Is that it's not backed by gold. None of those currencies are backed by gold anymore. So in other words, that's great. They can say that. The Russians are backing their currency supposedly by gold. What happens if they don't deliver? They don't have any laws to protect foreign investors. So, again, you can go into U.S. court when we backed our currency by gold, and exercise it. You could exercise it. Now you can't. So Nixon stopped that in 68, going in 69, I guess is. So, you know, the real challenge, is a reserve currency that, has a lot of law and protection for foreign investors. I think that's the best way to describe it. All right. There's the dollar. And as you can see, it's popping up. Bouncing off the lows here. It's still in a sell, though. It's got a red dot. And we're in a weekly sell. It doesn't look like it's going to change anything. Over here on J4X, you can see... what do you got? Yeah. See, it's trying to turn up. Wasn't that aiming down? Yeah, it was. Both of them were aiming down. Now they're both aiming up. So... Oh, no, that's the euro. We're looking at the euro. Let's go back to the dollar real quick on this so you can compare them. And then we're going to go to the euro. Where's it at? Where's it at? Where's it at? Where's it at? There it is. There we go. It's got that zigzag. And that's right. This is still... Oh, look at that. Look, it's coming all the way back up. That's why I remember it was really low here a few minutes ago. Look at the lows there. All right, let's go over to the euro now. Right there. There's the euro. You can see the euro feeling its pressure and it's through the dashed line and so forth. Let's take a look at it over here. There's the euro. It's actually touching or threatening, just touched the daily buy number and fell back again. So it's feeling its pressure there. We'll see what they do with that now over the next couple days and couple hours and couple days really. Looks like it's going to close in a weekly sell with no problem. British pound. There's the British pound. Same situation. It did lift up. Now it's pretty much unchanged. You can see it's red right there. Let's put pound up there. Right there. The Fed is in between a rock and a hard place. I agree. I mean, when you have under Democrats, Mr. Biden had a crazy speech last night. I read it. I wouldn't watch him. It doesn't make any sense. I got a phone call from one friend who's pretty astute and said this must be the Biden double. It's definitely not Biden. There are rumors in America for like the last year that there's a Biden double. Like in the movies, Because you ever see Biden sometimes when he tries to speak live? He has to have a cheat sheet. He reads, he'll read like end of sentence. He'll say end of sentence. So when they see a Biden that actually can kind of communicate fairly well, they think it's a double. All right. Now, cable, kind of just, now it's plus again. Bouncing around. Not looking like it's going to try to get into the weekly buy whatsoever there. Same thing here on the daily. And let's check it out on the weekly. Right there. Just pressing down. Getting towards the low end of the range. You see that when we extreme it out, So, it is pressing down. The green line is really dropping when you put it into this level. All right, from there we go over to the Swiss. And what we'll do is we'll go look at Swiss and then we'll look at the Euro Swiss. Where's it at? There we go. All right, you can see the Swiss still riding high. Very firm. Look at that rocket shot. See what happens when the green and the what I call the echo, the blue dashed, join in? Wow. That's like major horsepower. Now, let's take a look at Euro Swiss. Right there. Where are you? Right there. There we go. Well, that's going to close easily in a weekly. And look at the echo. Let's do this. Let's just remove that because there's the chances of it changing at this point are nothing. Right there. So that's in the buy now. It closes in 10 hours. Not even 10 hours. 4 and 5, 9 hours. Closes in 9 hours, but chances of it changing are very slim. Especially with the blue echo busting through the time manifold. When they do that, they never change direction. Especially with the green right on top of it. Now, it'd be one thing if the green was down in here, down below, or just really low, but they're just about kissing each other. So, it's going to close in a weekly buy with no problem. It's been acting that way for a couple of days. It's through the buy numbers, so it'll easily confirm it by closing there. And let me think, what else we got to say about that? That's about it. So there's the Euro Swiss, and doing very well. All right, let's just save that so I don't have to put that line in tomorrow. There we go. Let me take a sip of my last of my coffee. All right, from there we slide over to the Turkish lira. Let's take a look at the euro one of it. Looking very firm there. That's that little sell-off they talked about yesterday when they talked about doing that, or 2 days ago, I guess it is now. But yeah, the sell-off yesterday where it gained against the dollar. Now let's take a look at the dollar Turkish lira. Right there. And let's put the Turkish lira on here. Right there. And there's a weekly on the J4X. You see it's pointing down. And you can see this thing is making new all-time highs. Dollar Turkish lira now is 1826. And there it is right there. Our Euro Turkish lira, we're really holding up really nice in the weekly. This thing is kind of rolled over a little bit. I guess, because it is dipping here, the pressure was on it. And so the weeklies went into a weekly sell. But over here, rarely do we see it that far off. Usually it's just J4X is behind. And there was, in many ways, the J4X is very accurate in that sense. There was pressure on the product. You can see it's, basically back. I guess that signal occurred 10 days ago. So you go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So the signal occurred right here. Unfortunately, it's been going up since, but not exploding. It's just been going up. So in some aspects, it is telling us that there's weakness. Whereas on Chicago Quant, you can see we just kind of zigzagged a little bit. But we're well above the time manifolds and so forth, and even the histograms are above it. So they're basically saying, you sell me and you'll be sorry. And that's pretty much what our math is saying, is don't get short. And the daily, which did go into a daily, as you can see right here, we went into a daily sell there. We went into a daily sell here too, and then went into a buy for 1 day and back into the sell. So we've been basically in a sell since here, except for 1 day, and then we went back into the buys in here. So our math is picking it up pretty well on a day-to-day basis. And you'll see J4X more accurate on a day basis. Okay, just close. Very close. So, see all that green. You see us marching up. All right, so that's pretty much the story when it comes to the the Russian-China combination of trying to find an alternative currency. Problem is that the alternatives are not liquid. That's what they said there in that article. So, go to a sip of water. That was good. Now, we go over to the Canadian right there. Canadian's been, acting really strong, or losing against the dollar, in other words. Going up, so I guess it's weak in a sense. Going up, though, and that makes it weak because it's against dollars. And at the same time, you go here, you can see oil had been dropping. Today, they are popping it back up again. They went to 86 or 85 or something like that. The lows, 86.35. Now we are trading at 89.66 is the high, but we're at 89.31 at the moment. So we're pretty close back to the 90 number. And at the same time, over here, where is it at? Right there. There we go. And as the daily there, it's been marching up. We're starting, you see the green line trying to break through here on the daily, showing that same pressure we have over here, where it's breaking through the time manifold and trying to move down, but it's still in the plus. It's still in the plus. So I bet if we see $100 and something oil again in the United States from the spot month, and I guess what's that do for? Let's just take a quick look. We'll do it again, but let's take a quick look at Brent. See where Brent is. See if it's at 101 or something like. Not 101. 92, 93. No, 95. Okay, wow. Okay, yeah. So they're making a good hard push up, right now. And then as you can see here on Chicago Quant, we got that green line turning. Over on J4X, you can see that green line has flattened. So it's trying to turn. It's trying to stop. And you have higher lows, that type of thing going on. And we're just waiting for this to get through and this to turn green. And again, a J4X is about 3 or 4 hours behind us most of the time. And so that's the only difference really, except for, it's just it's a lag. We're able to predict future movements with our math faster and so forth. And that's the way it is with everything. MACD, moving averages, 200-day, blah, 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 you name it. Bollingers, we're ahead of the curve all the time, our math. Our math is always ahead of the curve. And if you ever want to, see evidence of it, we can go do that. We can put the indicator that you think could be the better indicator and match it up live to our work. That's why we always say we live and die by our math every day live. Not many technicians in the world are willing to do that. I can tell you that. All right. From there, we jump over to currency-wise to the South African Rand. Okay, there. We're going to put, you can see, it's kind of parked up at the top. Let's take a look at gold real quick over here on J4X, and then we'll switch them around. And you can see gold is trying to turn back up. And you can see South African Rand is just basically in the 17s now. A little bit down for the day, but still in that buy for the last. Where did the buy line go? Right there. Okay, there you go. So. Okay. So then, let's go the reverse now. Let's put gold up there. There's gold. And gold is lifting up. It's higher, and that's why the South African Rand is backing off. But we're going to go into a weekly sell here with no problem. Matter of fact, I think I'm going to remove that at this point and put the line in there. Because tonight, that's what it's going to be. It's going to be right there. And the chances of them really lifting that up is real surprising to me. So let's save that. If I have to fix it at the close, I will. But I doubt it's going to make that big a move. Now, just save that. There we go. All right, now we'll just show you the Canadian. Oh, no, South African Rand. That's it. South African Rand. Right there on J4X. It's been bouncing up, showing strength, so forth and so on. All right. No questions today? Everybody's kind of like chill. Just chill. Just listening to Doc. Doc is rambling and being Doc, and it's TGIF. Oh, my goodness gracious. I'm so excited. I love to have So this is a 3-day weekend, traders. For us in the States, we have our Labor Day today. And so I'll be here on Monday morning, of course, and looking at the markets because, they'll be trading electronic markets and so forth. But it's a 3-day weekend. So after I do my webinar, I don't have to save any numbers. I don't have to do anything. I can, we have parties and barbecues and boating, and the weather looks gorgeous. So maybe I'll send you a picture from a boat. All right. We'll show it on Tuesday or something like that. All right. Now, we're going to go. Oh, okay. South African Rand. Okay. Now we'll go over to the Japanese yen. Let's check out the Japanese yen. And there it is right there. Man. Going for the 30-year highs. Last night I looked it all up. I could have sworn I remember 80 and this and that. So the yen was up in the 300s when I first started in the markets. So it was like 300 yen to the dollar. And I remember 280 and 220 and, just all the big numbers, And the Nikkei was at 39 because you know what I did? I went and looked at the Shanghai index. I was curious. I've talked about it here on the webinars. And I was really curious. As I remember, it was like 4,800 or 5,000. The Nikkei in 2000, not the Nikkei, the Shanghai in 2004 was trading, or 2005, right in that area. It gave us 2004 to 2008. And the Nikkei, I keep on saying Nikkei, the Shanghai, the Chinese index, the main Chinese index, was trading at 6,000. And it's trading at 3,000 now. So it's still 50% down below its all-time highs, whereas, you're looking at the Dow Jones Industrial Average for like 14% off its all-time highs. So that's, or 15%, right around there. Everyone seems tired all around. I hear you, Giannis. How you doing? I was really excited today about seeing what these numbers came out because it's becoming, I could see the strength in the metals yesterday. And I could see the buying in the stocks, and I thought, okay. Remember, I've been talking for 3 months now. I'm figuring that, end of September or going into October, we're going to start to see that turn. And they're taking the metals down for us perfectly. They're bringing them down, taking them down so everybody can buy them to take them back up again. So I wanted to see this. I thought this was the beginning of the signal. And sure enough, you notice how gold went up today from that economic news? Let's just take a look at it again real quick. There it is there. It made that nice bounce out of it. Look at that. Look at silver. They both did the nice little bounce out of it. Let's see what copper did. I know we normally don't jump at it that quickly. Now copper has barely moved, but it did move up a little bit. So the yen. Hey, Captain, I'm right with you. I am right with you, baby. Yes, sir. Let it all burn. Let them deal with it. Rip it up. I agree. With the strong and healthy, the hikes are incoming, recession imminent, but there are still strange recoveries on low volume by the bulls. Yeah, I know. Well, you know what that is? I've been telling you what that is. What that is the election. The media is doing its normal thing. In other words, the Republicans are doing great in the polls all the way up until about 3-4 weeks ago. And then out of nowhere, all the national media, like every year, like every 2 years, and like every 4 years, somehow or another, Republicans lose in the polls out of nowhere. And then Going into the last week, the polls tighten all of a sudden out of nowhere because they don't want to be on the record for being so wrong. And then what happens is that Republicans have been winning races everywhere since like 2019, okay? And they picked up seats in 2020. And now it looks like they'll take control of the Congress with no problem whatsoever. And they'll take control of the Senate. And so the media has to press it down. So the markets, the smart money is betting that it's going to happen. And that's where that fits your statement there. Strange recoveries on low volume by the bulls. Enough of this soft landing talk just because of the incoming elections. I don't know about soft. I thought, look, the Dow is down what? The Dow had gotten down 20%. The Tech 100 down over 30% at one point. Where's that at? So I wouldn't exactly call that a soft landing. To lose 30% of the value. I mean, look, talk about hard landings. The Chinese market, I was just saying it, is 50% off its all-time highs. Where did we go there? Here we go. So there we go, right there. The Tech 100, right there. They had that thing down to 1,100. I mean, that's a big smash from an all-time high of what was it, 18 or 19 or something like that? It was 17 right there, right? Let's go to J4X. J4X is more accurate when it comes to looking back. That's what I like about J4X. That's why I like to use both of them all the time. Let's go find it right here. There it is right there. Tech 100. Let's put the weekly in there. So right up there, 17 down to 11. Yeah, that's like China move, losing 6,000 points, almost 7,000 points. That's pretty punishing. That's a 35% drop. I mean, the Chinese market is down from 6,000 down to 3,000. That to me is not soft landing there when it comes to the U.S. market in particular. Whereas, and then the Dow Jones was down like 20 some odd points at one point. That's a bear market, 20 points. So it wasn't soft, but now it's acting. I think they've got them all. I think you're right. They're all scared. Enough. The soft landing rubbish. I agree with you totally. I think it's bull. I think they've smacked a lot of it down. There's a lot of companies that are beat pretty hard. And there's a joke going around in the United States right now. Are 401ks or 301ks now? People are saying that. Yeah, the Tech 100 is the Nasdaq 100 exactly. Let's see. So, where did we leave off? Oh, currencies wise. So there's the yen ripping along. Let's do this. I forget who asked for the. I think it's 47 asked for the Nikkei. So let's take a look at the Nikkei. Right there. It's lifting now. It's plus for the day. It was minus earlier today. You see it's trying to go plus. It's been in a sell since here. It's still in a weekly buy compared to the U.S. indices. That's interesting. And there's the Nikkei coming into the end of the week. Now, we jump over to the last one of all. And that is the Mexican peso. South of the border. Woo, look at that smack. So, let's see. When that goes down, it's gaining against the dollar. Look at that. It's even threatening a daily sell. But the weekly buy is still having its issues. Notice how the blue echo has gotten through the zero line. And the green is trying to turn up, but it's nowhere as near. Nowhere's near. I reckon. Nowhere's near touching the manifold there. All right, that does it. That completes the currencies. And let's see, where do we go from here? From there, let's go take a closer look at the metals complex. There it is right there. Oh, here you go. Please, may I know what is the oscillator indicator second from the bottom on the main window in dashed yellow and solid green and its settings? Oh, yes, no problem. Anwar, right? Hey, Anwar, how you doing? On this screen, we watch two screens here. Let's just identify them. This is Dukascopy's J4X. We use this, and we have a couple public indicators in here, but they are of our persuasion. Okay, in other words, my way of interpreting the markets. Okay, we'll explain you these so you can see the public ones. Now, let's give you a flavor of Chicago Quant Technologies. This is my proprietary indicator that I invented about 45 years ago. Is it 45? I invented it in 77. So that's 23. And yeah, 45 years ago. And we'll just give you a very simple answer. I'm not going to be too nuts because Doc can be nuts. And that is I developed to deal with the Higgs boson at the time. Okay. At the same time, I had gotten a job at the American Stock Exchange. So I started looking into the marketplace. I was on the physics side of life and science, and they started legalizing options, and we started doing this. Now, here is the second one right there for you. Do you have a product in particular you'd like to see, or you don't care? We can look at it in the euros. We can look at it in the S&P 500. Anything you would like to look at, we can look at it. Now, like here's the S&P 500. Now, what this is what I call a gas line. It's kind of a combination of using Gauss's mathematics, my proprietary mathematics, which advanced what I consider Gauss's work, and Euler. And so we turned it into gas, for Euler, like oil, Euler, and Gauss, and we call it the lines. And he's fine. Excellent. Okay, good. So we use the S&P 500 since it's like the biggest tool of all. All right, so what you see here is this is what I refer to as a nonlinear time manifold. And what that is it's basically a one standard deviation, like in Bollinger Bands, okay, of my math, of my formula, okay. The green line is let me think, remember, it's a moving average of my mathematics. So these gold things right here, let's make them bigger for you. These gold things, like that, are standard deviations, one standard deviations. I actually have two standard deviations if you want to see that too. That's on gases, not gas lines. And the reason we call it a line is because the green lines, the manifolds don't go through the zero line like they do here. Only the plot one, the green, the white histogram. So the white histogram is one average. The green line is another average of my mathematics. Okay? And then you have a negative, again, like Bollinger Bands, negative and positive. A one standard deviation minus. I used to do a TV show with John Bollinger when I was young, called The Guru Review back in the 1980s. I'd be on the TV every 2 weeks. John and I would do his show and talk about standard deviations. John invented his Bollinger Bands as an indicator. I myself I didn't tell him exactly what I was doing at the time, but I was playing around with standard deviations of my mathematics, and I would not give out my formula of my mathematics. I would just kind of describe it, the results. We follow the results. So that's the center one, okay? And what that is following is the daily. Right there, that's the daily bars. And in the red and green dots are my old mathematics, unclean, or not cleaned up, or not modified. Let's put it not modified. So there's like a daily buy, and then it goes into a daily sell, and there's a daily buy, and then when they two hit together, it's usually telling us that there's volatility coming. And notice a couple days later, you get massive moves. It always does that. It picks up the massive moves. Let me see if I can find you another red and... Oh, it's doing it again right now. It's doing a red and green as we speak. We'll see if that works out. And so that's the center chart right there. We'll just move that up a little bit like that. That's the center chart. I'm going to give you an example of what the bottom chart is. The bottom chart is a weekly chart of the S&P 500 using the same mathematics but only on a weekly basis. So in other words, When it broke through the zero line, it means things are going up. When it breaks below the zero line, let's see if we can contract this a little bit for you. It means it's going down. Notice we go into a weekly sell this week right in here, somewhere around there. We usually confirm by the close of the week, but once it's underneath, we know it's going to be there. Notice that everything wants to go down in value once we start to break down. See the daily went into a sell right there. Notice it breaks down in value. Goes into a buy. Notice it breaks up in value. See it goes down in value. See that? In other words, Doc's math is 8.5 out of 10 times right. And if you follow the weekly with the daily, it gets even more accurate. Okay? So in other words, if you only take the buys when it's in a weekly buy, so we're in a weekly buy here. Imagine if you just took the buys, but you don't take any, you don't short it here on the daily. You just take your profits or stay out of it, flat. And then notice another buy again. Notice again, you make, don't mean to, it's a Bollinger Bands. Someone asked us about Bollinger Bands. We've been following them. Not Bollinger, I'm sorry, Fibonacci's. Our math is what I call pre-Fibonacci. Okay? So in other words, you take, the golden mean, or in the later in Europe, Fibonacci, the mathematician, kind of accentuated it, made it very understandable. You take that concept, okay, mathematical concept, and our math is ahead of that all the time. So in other words, when Fibonacci, when the golden mean reaches a half or 1/3 or 2/3 or 0.23 or 0.78, when it does that, you'll find our math is turning already. It's telling you that it's there. And so that's exactly what's going on here, is that you're seeing you're seeing in the center chart on a daily signal right there, and the bottom chart is showing you the weekly. It's looking at the math here, the charts themselves as weekly charts. And there's times where you'll see right here, we're in a weekly sell. Let's go, where is it? So we went into a weekly sell here. Product has its tendency to go down. You see that going down. And then it gets here, it goes into a buy. We went into a daily buy here, so you're not short. You know not to be short, but you missed the rally. Okay? And then we go into a buy, and you think, oh, good, I can get long. And yeah, you get long and you can make a little money, but notice you're not making much money. And then we go into a daily sell right there, and we slide back into the weekly sell again, just after 1 week. In other words, we have had products we follow here on Dukascopy, on the weekly. We've seen products go 54 weeks in a weekly buy, and a product can go up 30-40%. We've seen products. Do you remember Enron, the oil company? Enron went into a weekly sell for me for 27 weeks, went from like $68 a share down to like 30-something, went into a weekly buy for 2 or 3 weeks, and went into another 20-some-odd weeks. It was matched. It might have been 24 weeks in a sell. And then another 24 weeks down to about $12 a share. So in other words, we see products go into a weekly buy 1 week and go back into a weekly sell the next, because it's reading the market. It's not an average. It's a what I like to call a consciousness. It has the characteristics of before I went into physics, I was doing pre-med. So I look at it more like the spark of ganglion, the way the mind communicates. It's a consciousness. And something I don't know if anybody can describe. I can't describe it. I just relate to it, the way it makes decisions, like a thought, like a consciousness. And so I've had some PhDs in computer science say the same thing. They say, this is amazing how it does that. And you can see all these Nobel Prizes of late. They are pretty interested in the physics universe. Is very interested in biophysics at this point. The Nobel Prizes in biology has the physics world excited because they're trying to understand the spark, the communications. And so it's not AI. AI is kind of like an average. You have X amount of things do this, so then you get that. You get an X amount of averages doing this, you get that. AI, artificial intelligence, is basically like a memory thing, like a collection of information. Whereas our math is more like a consciousness. There's decision making going on, and we don't know why. It just does. Okay? And so we are able to measure the spark, the strength. Oh, yeah, here you go. For the first time I've ever tried to explain this. See, this is what happens when someone asks me a question. I start to extrapolate my own mathematics. We're able to measure the spark, like in ganglion and mind, the spine communications and the neurons and all like that. We're actually able to measure the spark, and by measuring the spark, it tells us what it's going to do. If it's going to move the finger, or if it's going to move the arm, or if it's going to make my stomach feel hungry, or if I'm going to get a headache. Okay, and so I hope that answered everything. Can we access your Chicago quant for usage? Yes. Yeah, you can. Hey, Doc, can you take a quick look at the Nikkei? I did. What did you do? Walk away to get something to eat? There, let's put the Nikkei back up there, 47. Where is it at? Right there. There's the Nikkei. Look at the Nikkei. Still going to hold up in the weekly buy, very comfortably. So yeah. Let's see. Let me just show them that, and I'll answer that Chicago quant thing. Where is it at? I have it here somewhere. Where is it at? I have it right here. So there's the Nikkei. Notice the Nikkei is not willing to go into the weekly sell this week. I think that's kind of interesting in its own right. Just that strength alone, it kind of really surprises me. And let's see if that does it. So I'm trying to find something for you here so you can see it on a repeat. I'll just do this. There we go. Right there. There you go. Was it Anwar? Anwar. There you go, Anwar. You'll be able to look on the video and go back and see that. So, now let's just let's get rid of that. Let's get back to the Nikkei. You see the Nikkei right there. It's been in a weekly buy since back in the middle of July. And you can see the daily went into a sell there, as we talked about. It tried to get into a buy. Notice we got the volatility signal. Don't be surprised if you get some real good action out of it on Sunday night, Monday. Remember, the Americans are going to be closed, too. So, that's what's going on there. And I hope you saw our information there, Anwar. And let's see. Let's get rid of that. So where do we go from here? Let's go to... what do we do? Anwar, would you like to see anything else? Just give us, just throw it up on the line here. We're here every day. And we use a combination of... Oh, let me go explain to you what I do with J4X. Here's J4X. What we do is we're using two different stochastics. We're using a fast and a slow stochastic. Something I learned from my physics world, physics lifetime. One of the physicists I knew was working out of Stony Brook, processing stuff for Oppenheimer. And when they weren't using the mainframe, they were using it. Remember, New Mexico was 3-hour difference. So, in other words, even with the scientists getting up at 6 in the morning out there, having their morning meeting, figuring out what needs to be computed, and so forth, it might have ended around 8 o'clock their time, which was like 11 o'clock our time here on the East Coast. And so the physicists were sitting around at Stony Brook, and what they were doing is they were using the computer to watch New York stocks. And so they were watching New York stocks, and they were using different tools. They were using stochastics, and they were trying to use other stuff. They didn't go as far as I did, but they were using it. So then you notice, fast forward, Jimmy Simon. Jimmy Simon is a mathematician. He's also the most successful hedge fund manager in the world. And Jimmy, chain-smoking Jimmy, took the position of head of physics at Stony Brook back in the 60s. He took it over when the physics department had fallen apart in some ways. and things were drifting a little bit, and they were looking for the head to take over the physics department, and Jimmy Simon jumped in and said, "I'll take it." And so he, I guess his success formula with string theory back then, which wasn't string theory, but it was only like a theory at that point. That was a Chern Simon manifold. So he took over. I knew a physicist that was doing the work there during the war, and he was probably chasing after the math that they had used on the mainframe. Now, Jimmy Simons is the owner of Renaissance. All right, Renaissance Technologies, which is the most successful hedge fund in the history of hedge funds. So that's what we do. Is I put that together. That's all public mathematics. Only thing is, I know that mathematics, and I put it together correctly, not the way they were using it, but the way I was speculating that they might be using it. I'm going to go up there. Me and another scientist they have open days at Stony Brook. I want to see if the mainframe is still there. I'd like to try to get into using it. I'll just discuss it with somebody up there, and then I'll be able to see if Jimmy Simon used that work. My work's better than Jimmy's as far as I'm concerned, but that's besides the point. All right, we're out of here. It's Friday. The stock market's getting ready to open any minute now. We can see. Let's show you how the U.S. stock market opens up this morning. Well, you can see it there. The Dow Jones Industrial Average is up 262 points. Here is our math being used in what I refer to as this is intraday chart. So we'll go with let's go with the S&P 500. We're using what I refer to as a 2/3 Tesla. Actually, it's not 2/3. It's a 0.78 Tesla. I measure time differently. I use spatial time. And you can see here we go into the cell right here. We're going to put a line up there for you all to be able to see. Like that. It went into the cell right there. Let's put a big white line. There we are. And now you can see the action. Where's it at? I think where's it at? Right. Right there. So you see we go into a sell there. Products have a habit of going down. We just went into a buy right there. Found a way to go up for a little bit. The markets will tell us where it's going. It goes into a sell there. It went down a little bit. Still going down. You see the pressure on it. This is intraday trading. Again, we're usually about, now see it's playing around with the daily buy, or not daily, intraday buy, and it failed. It's a red and a green, giving a signal of some real strength, so it'll probably make new lows, which it just did. And you can see our math is actually predicting before it happens. So we're still in the sell from this point here, and the product is going down. So that's, it's Yana says, Dukascopy has futures for stocks. Yeah, Dukascopy has it all. You can trade through Dukascopy. I see Yana says, so the open and close is just on increasing of volatility. Open and close, open and close. Oh, you mean the like the red and green dots? Let me see how to answer that. On the increase of volatility or decrease of volatility, both. It's like a rate of change. What is not locked in this position during the U.S. events hour before the official open? Yeah. Markets are. It depends. Depends on how you look at it. It depends. But yeah, you're right. It's the start of the day is the U.S. Market a lot of times. It depends. Like you have your European Open, your Asian Open. There's an average of it all, that type of thing. Now you can see here, what did it do? It tried to get into the buy right there, and failed, right there, and then jumped back into a buy right there. You see it through here. Let's see if we move the line over, and you're seeing the intraday action. Now it didn't get into the buy until right there. And it jumped up, barely making it. Now it's back into the sell again right there. And you can see the downwardly pressure we're seeing with it. So, I guess, Giannis, today we could call this, where the hell's my tablet? Oh, there it is. We could call this something about technical analysis, how to read technical analysis. How about that? This way, they're hearing about stochastics, they're hearing about standard deviations, that type of thing. We can do that. That'll be the title today. How to technical analysis, how to read it. Does that make sense? Let's I'll put it through the chat line for you. Let's see, title Title. There we are. Technical. Mr. T. Technical. Analysis. Okay, there you go. Excellent, Anwar. Stop in and say hi. You're always welcome to. And you have all the data you need to get a hold of Chicago, so you're fine. All right, this is Doc from North America saying happy trails to you until we meet again, which is Monday. Happy trails to you, to all our trading friends. Later, traders. Have a safe and smart weekend. Arrivederci.